What does this pricing tell us?
Well, by normal standards, pricing at the bottom of the range is usually a disappointment and signals that perhaps something went wrong on the roadshow and promoting the offering to professional investors. But Robinhood is taking a unique approach here, and they're really counting on their army of retail traders to provide a same-day pop in shares. That's what all IPOs hope for, is the initial day of trading for the shares to go up and not down. So Thursday in the U.S. will really be a test for this strategy. They're offering 55 million shares and again had aimed for a valuation of $35 billion. That would have been a midpoint of the range, coming in at about 40. We've heard through sources it's come in at the bottom of the range. A third of those shares being set aside for the users. It will trade under the ticker HOOD on the NASDAQ. And it's important to point out that Robinhood has really seen itself as democratizing finance. So catering to its own traders and users is part of its identity. It is also warned in its IPO filing that because of this unusually high allocation for retail investors, we could see volatility in the early trading. We should also point out that sources tell us in the lead up to the IPO, the private trading shares had traded as high as 55, also lower than that. So that leaves a big question mark on what we'll see in the U.S. trading on Thursday.